There are rules to day trading, things that you should just never do, and I want to list those rules out. A rule you should never break. First off, if you have a stop, if you go into a trade and you have a stop and the trade goes against you and it hits to your stop area, you have your risk reward, you're at the point where you've got to cut off the trade, you have to cut off the trade. You got to cut it off. Just bang, cut it right off. So if you don't cut it off, what can happen? Your account, the loss can double, can triple, can grow much larger. So instead of only losing $200, you can end up losing $800. And that's a massive difference. 200, 800, it's going to really affect your overall mental and financial capital. So if you have a stop, which you should always have a stop going into a trade, if you have a plan, you have to cut off your losers. Remember, we're day trading. We're not holding long term. We're not investing. We're trading the momentum. We're trading the chart. So I think that's the number one rule as a new day trader, that you have to cut off your losers. The second rule, we don't trade earnings. We don't make bets. We're not betting that a stock's going to go higher. We're not betting that a stock's going to go lower. And that really comes down to trading earnings. I tried to trade earnings when I first started trading. I thought it was a great idea. I could just pick a stock that had earnings and place a bet. If I want to place a bet, I might as well just go to Vegas because I got better odds. 50-50 is a better odd than the 50-50 chance that you have a lot of times with the earnings. I think the earnings, most of the time, the odds are not 50-50. It's like 10 to 90. Stay away from earnings. Stay away from big events. If a stock has news coming out in the next couple of days, just be careful. Be really careful. Another thing, if a stock is up really, really big, the third rule, the third thing you need to focus on when you're a beginner day trader, if a stock is up 300, 400, 500% on the day, and it's just going higher and higher and higher, and it's just looking insane, just stay away from it. Just do that for me. Just stay away from it. Because although it looks amazing that it's up big, you want to jump in, you want to take profit, it's beautiful, correct? It's everything you wanted, but you missed out on it. You should have got in much earlier, you should have got in much sooner, and you missed out, so just stay away from that. Just don't go chasing some massive stock that's up 300, 400% on the day. Just stay away from it. There's going to be better opportunities. The fourth idea is if you are trading a stock and the stock ends up, let's say you buy it at $5, your stop loss is $4.50, and it crashes to $4.25, and you get out for a loss, and then all of a sudden it pops back from $4.25 back to $5, and you chase it again and you try to buy back in. You really need to make sure that if you stop out of a trade or if you enter a trade, whatever you're doing in terms of entering, exiting trades, that before you go and do something stupid like re-enter the trade or try to jump back in all of a sudden, take a deep breath. Maybe just walk away for a second. Just put your hands in the air, just take a breath, figure out, okay, what happened, what's going on. Don't be so quick to jump in, jump out, jump in, jump out. I've done that, I've been there, and I know it doesn't work. Because what happens, okay? You bought it at 5, it dropped to 4.25, it bounced back to 5. You're like, well, I'm going to jump back in because it's going to go back higher. And then you buy at 5, and it drops to $4. So again, you're now doubling your loss. You're becoming emotional, and you're not focused on actually trading. You're just focused on this emotional idea of buying this stock because it's crashing. And then you're like, I want to buy it because now I'm right. And it's just all becoming emotional. I forgot what rule we're on, but in general, there's no hoping, there's no praying. If you enter a trade, the trade is not going in your direction. There's no sitting there and hoping and praying. If you get to the point where you're hoping and you're praying, you know that something is wrong, the trade is not working out, so just go ahead and cut it off. Be realistic. Don't try to hope and pray. Another rule you should never break as a new day trader is if somebody tells you that a stock's going to a certain price or somebody tells you that something's going to happen, don't believe it. Just because people on StockTwits are telling you that this price of the stock is at $200 and it should go to $500 tomorrow, don't believe it, people. Don't be gullible. Don't buy into the hype. If people on StockTwits are already talking about a stock and everybody's talking about how it's going to the moon and it's up 300%, there's a reason that everyone on StockTwits is talking about it, because the move is over and it's probably going to crash back down. So don't buy into the hype. Don't buy into the social media hype. Like I said, stay away from it. Another very important rule is don't judge your trading off of anybody else's trading. If you watch videos on YouTube and you see some guy who's making thousands of dollars every day, but you're only making $100, don't be like, well, I got to do what he's doing. If you're making money, you're profitable, just stick to it. Stick to that plan. Have that process. Go through it and learn and evolve. That trader that you're watching make thousands of dollars in one day, those are traders who have done exactly what you should be doing right now, which is go through the process, learn, take time, spend time, put in the work, put in the effort, and learn about day trading so that you can get to the point where you're able to make $1,000 in one day. Don't be the guy who's just chasing every different strategy there is. Don't be the guy who's just trying to buy anything and everything and trying to short anything and everything. Be consistent. If you have a strategy, you have a plan that's working, continue on that path until you figure out that you have a better strategy or a better opportunity. Another idea here is just stay away from ETFs. I see a lot of people who are like, I'm trading this 3 times ETF, I'm trading the VIX, I'm doing this. If you don't understand what you're trading, you don't understand the idea of whatever ETF or whatever inverse ETF or whatever it is that you're trading, if you don't know what the underlying asset is, you don't understand why this stock is moving a certain way, just stay away from it. Don't be that guy who's trading the VIX, who thinks that the VIX is going to go to $1 million and you're going to hold it. It's something that you need to understand. All those 3 times ETFs, they're all going to zero at some point. They're all built to go to zero. They are meant to lose value. They are day trading vehicles. They are not long-term investments. So be careful. Another thing is if we're day trading and you're getting into a trade in the morning and that trade goes against you, please, please do not be the guy who holds that trade overnight, hoping and praying that it's gonna maybe pop and go back higher the next day. There's a chance. I'll agree with you that there is a chance, but the chance of it going lower is much higher. Don't be that guy that tries to just hold anything and everything that goes lower. It's not going to work out. And before you know it, all your capital is going to be gone and it's going to be game over for your day trading experience. I don't know what I'm doing with my hands right now, but I'm just like karate chopping the idea of your account. This is basically every time you make a bad trade, it's just like chop, 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 chopping it up till you finally have no money left. So let's focus. Let's be realistic through it all. Another very important rule is we don't just go and average down. So let's say we buy 1,000 shares of a stock. It's at $4. It goes to $3.75 and it's going lower. Our stop loss is, at $3.50 or whatever it is. And we just continue to add and add and add and add to the point where we're 100%. We put every single bit of capital into that trade. And at that point, if it goes any lower, we're gonna blow up. So we really have to be strict with the idea of adding into positions that are losing positions, not adding into losers and then hoping and praying. If you're just sitting there adding and adding and adding with no real thesis on why you're adding, no real reason, then you're just, again, you're gambling, you're hoping, and you're praying. So do not allow yourself to do this. Do not just keep adding and adding and adding to losers. Another really important rule as a beginner day trader is you do not have to place a trade every single day. That is something that I thought I needed to do. When I first started trading, I thought that I needed to place a trade every single day, and I thought that I needed to always be trading. If the market was open, I believed, emotionally that I had to always be in a trade. Every day I was like, I gotta be trading. If I'm not trading, what's the point of being a day trader? The market's open, I gotta be trading. That's the worst thing you could do. There are going to be days where there are not going to be opportunities. There's not going to be things to trade. There's not going to be safe opportunities. And those are going to be the days where you just need to sit on the sidelines, you need to watch, maybe just kind of sit back and watch, figure out what happens from there. But don't be that guy that feels like every single day you have to place a trade. Wait for the setups to come to you. And the final and last thing that you should always really focus on here, my friends, is if you have a maximum loss for the day, let's say your maximum loss is $200, $500, whatever it is, depending on your account size. That maximum loss is there for a reason, and you need to be able to step away. You need to be able to stand up, you need to be able to walk away. If you have a really bad trading day where you lose a lot of money, the best thing you could do is just walk away and come back maybe in like another day or two. Maybe just walk away and just put your hands up and just walk away. Because at that point, you're emotional. At that point, you're just revenge trading. At that point, you're just doing nothing but adding insult to injury. You're just adding salt to the wounds. So please, if you get to the point where you're at that maximum loss today, you just had nothing's worked in your favor, you've had nothing but bad trades all day, just stand up, walk away. It's going to happen. You're going to have red days. There are going to be red days. You are going to hit your maximum loss. But there's a reason that we have the rules. There's a reason that we have maximum losses, because at that point we know that something is wrong. We're just not doing what we need to do. We're not focused. So we got to just get up and we got to walk away. So really, please understand that the reason of having rules is to follow the rules. So if you have a maximum loss, don't be that guy who just sits there and keeps trading and trading and trading. Before you know it, you've now quadrupled your maximum loss for the day and your account is at 0. So remember that rule. Maximum loss, we walk away. We walk, we walk, we walk.